Oil prices continued to decline on Monday. WTI crude has already fallen below $100, while Brent is approaching the psychological level. Such a significant price change can be attributed to the ongoing negotiation process between Russia and Ukraine. Representatives of the states held a regular meeting on Monday. However, talks between the diplomats yielded no discernible progress, and they said the negotiations would resume on Tuesday. Today, the absence of bad news and harsh statements is perceived as good news. Against this background, oil quotes managed to drop considerably. In addition, a number of other geopolitical factors also affect the value of oil today. In particular, they include a possible easing of oil sanctions on Venezuela and a new wave of the pandemic in China. On Saturday, the country reported the highest daily number of cases in 2 years. As a result, the authorities of some Chinese provinces and major cities tightened quarantine restrictions and introduced a lockdown. It's still difficult to predict the impact of these events on global demand, but it's a fact that there is another risk factor facing markets. From a technical point of view, Brent crude oil futures are still in corrective territory. The benchmark has already reached the important psychological level of $100 per barrel. To continue its downward movement, the price needs to settle below this level. Otherwise, the market will see a rebound followed by a resumed bullish run. The dollar-ruble pair is still experiencing a correction. For several days in a row, the Russian currency has been paring its early losses following a jump to 153 rubles per dollar. The ruble is being supported by the relatively calm in terms of news releases, including the conflict in Ukraine and attempts to resolve it with the help of diplomacy. A new round of negotiations between Kyiv and Moscow, which began on Monday, has not yet yielded fruitful results. In any case, talks are due to resume today. This means that there is still hope for diplomacy. At the same time, there are no economic factors capable of pushing the ruble up at the moment. The number of sanctions on Russia continues to grow. Companies keep leaving the market, while foreign governments go on imposing restrictions. Under such conditions, the only factor that keeps the ruble from falling is the negotiation process. So its further movement depends on the outcome of the meeting. Speaking of technical analysis, the dollar versus the ruble pair continues drifting around the level of 110 rubles per dollar. As long as market participants cannot keep the quote below this mark on the 4-hour chart, the risk of a rebound followed by a new round of speculative growth remains. If the price fixes below 110 rubles per dollar, the trading instrument will most likely head for the level of 100 rubles per dollar. The yellow metal continues to suffer losses. In a few days, gold prices have lost over $120. This is a fairly strong price change, which may well turn into a new rally. The asset's decline can be attributed to easing global tensions. The continued talks between Russia and Ukraine, as well as the absence of new major bad news, contribute to a lower degree of global uncertainty. This appears to dent investor appetite for safe haven assets. Nevertheless, one should be careful and keep in mind how sharply and quickly markets react to the news from Ukraine. And now let's take a look at the trading chart. Yesterday, gold futures fell deeper into correction territory and settled below $1,930 per ounce. In less than a week, the asset lost about 6% in value, which is a pretty strong price change. Thus, its oversold status may lead to a subsequent reversal in the near future. And this was the forecast from our analysts. As you can see, the main trading instruments are still in correction territory, while market participants are awaiting the results of the negotiation process. Watch our videos and stay up to date with the latest news. See you back soon.